So we are actually doing the statement of cash flows. Now pulling our information from page 8 and page 9. So I like starting with the statement first sometimes, so that's what I'm starting with today. So you can check and make sure your stuff came in. Now, when I did my outline, net income always has to go first, so put that first in operating activities. Then you need a kind of statement adjustment to reconcile net income or reconciling net income to cash or something like that. And then we'll have a cash source or a cash use, cash source, cash use, cash source or use for each of the sections. And we have our fourth little section at the bottom. So this is our first section, our second section, our third section, and our fourth section. Now I put this in just to remind you, always make sure you put an area for notes. And in our case, our notes will be anything that's non-cash between us and one other party without an intermediary in between. So, hopefully you've got your little schedule drawn up like this. Let's just start going through the statement. So let's start with the statement of financial position. Okay, we know we've got a place saved for net income. So now we go to the cash balances. So our cash balances, we started with 35720. So that's our beginning cash. 35720. Then we've got ending cash. So that should be be 18,800, and it would go here. But first we have to see if we do it right. Okay, so we've got cash done. Accounts receivable went up by 11,280. So it goes in operating and subtract. So we say increase in accounts receivable. You can also put an up arrow. And the increase is 11,280. And if we've already assessed it, it's subtracted from operating. Okay, then there's an increase in inventory. So increase in inventory. And that's 940, and we subtract it because of the rules on our earlier page. Hang on, let me just, on page 6. So you can look at page 6 and 7 for all the rules for the sections. Okay, then we had prepaid expenses went down. And they went down by 3760, and they're added. We don't use the fair value OCI investments. I'm just going down the balance sheet. And the equipment, that's a weird one because it was split into two as we saw on page 8, which I have now lost. So our equipment on page 8 is going to be that right there. So that is on investing activities, and that's going to be purchase of equipment. And that is 5640. Okay. Accumulated depreciation, we're not touching. We just use it to make sure it doesn't need analysis. And we found our accumulated depreciation was the same as the depreciation. So I'm just going to make a little note here at the bottom. So increase in accumulated depreciation. So we don't need to use it unless there is a calculation or a missing calculation. For example, let's say they didn't tell us the depreciation on page 8. They said nothing about depreciation of 9,400. Well, looking at your equipment, you didn't sell anything, so we wouldn't have decreased accumulated depreciation. So you could look and go, well, since we didn't sell anything, likely this accumulated depreciation is the depreciation. Okay? And again, you guys, you've done the exact same questions. This, we didn't even really add anything in except that you don't need to use OCI. So it should just be just like intro. Okay, now let's go to liabilities. Accounts payable, it's a current liability, so it's an operating, and it went up. So you have to put some kind of verb in there. Oh my gosh. Increase in accounts payable or decrease, tell what direction it's going. Increase in accounts payable is 14,100. And we said we add it. Then we have income tax payable, and it went down. By 940. So you spent more than you expensed, so you have to decrease your cash even more. Dividends payable is already taken care of. Okay. So moving down, we go to long-term notes payable. And that one had the extra little pieces, so let's leave that because we need to go back to page 8 for that. Common shares. What do we do with common shares? Which section? Yeah, it goes in financing, and it's a source of cash. So we issued common shares, and notice here we also have verbs of what happened. We issued common shares for $65.80, and it's positive because it's a source of cash. And as you go through each of these, just check them off. Put a circle around them if we're going to look at the additional information. Something like that, that'll keep you balanced with it. Okay, retained earnings. What did we do with retained earnings? Well, it's in two pieces. The net income, which was on the income statement, goes right at the top. That's 12,220. So we'll leave that there. Some people like to put it out here. It doesn't matter what you do. Okay, so that was that. Then we had the dividends. So where do dividends go? Under financing. So cash, dividends, paid. And remember, we only care about the cash. So we separated the cash out. So it's 3160, and it's negative because it's a use of cash. Okay, moving down then. Is there anything on the income statement we needed to put in? Well, we've got our net income already, so that's taken care of. And anything else? Non-cash items. So depreciation expense has to go here, goes in operating. And we add it. And how much was it? 9,400, right? Yes. Did everybody find that number? Now, it lowered our net income. Our net income would have been higher if we didn't include it. We shouldn't have included it because it wasn't cash going out. To add it back to increase the net income. Okay. Now let's flip to page 8 to see if there's anything else we have to do. Okay, so looking at page 8, interest expense would have been operating activity, or interest revenue. So we're done that. 2, our operating expenses had depreciation. We took care of that. Number 3, we didn't have to do anything with. Except, no, perhaps there's a purchase. We better check. Number 4, this is on page 8, common shares issued for cash. Check. Now, number 5, this is the one we care about. Okay, so we exchanged equipment for long-term notes. What do we do with this again? It's a note at the bottom of the statement, so that's exactly what you write. You put exchanged long-term notes payable for equipment worth $75.20. Okay, so we took care of that. Now just keep taking a look at page 8. Is there anything else we need to put in? Okay, well, looking at our little equipment T accounts and long-term notes payable, there's 2 things we have to do still. We have to take care of this purchase for cash of equipment and this issuance of long-term notes payable. Do I have those backwards? Not issuance, payment. I can't read. Payment of long-term notes, which is going to go in finance. So these 2 will have to be put in. So let's see if we have. Under investing activities, we've got purchase of equipment for $56.40. So we already have that. And the other one was long-term notes payable. And because it's on the debit side, it's a payment. So we put repayment of notes payable, and we repaid $40,420. And it's also negative. So both of those are uses of cash. Okay, so take a second, look over your page 8 and 9, make sure everything's covered. Just making sure I covered all of them. Okay, it looks like we've got everything unless I've missed something. Hopefully I haven't. Okay, now we have to put it together. So, you can either have started here and then you're going to add this, so you're going to subtotal it, or you're just going to add all the way down. So I've started here, so that's what I'm going to do. So I start with the 12,220, add all the way down, add and subtract, sum it, and I should get, we should get 14,100, and that's going to be positive. Oops, I don't, because we're not using this. Sorry. 14,100. Guys, I swear I've taught this a billion times. I don't know what. I think recording it makes me nervous, actually. So, yes, you add this. Sorry, on my solution I started here and subtotaled. Okay, so you add all of this, and your total cash is 26,320. So, is that cash coming in or going out? It's coming in to us. So it's cash provided by operating activities. If it was negative, it would be cash used. And that's our little number 1. Okay, my timer's going to run out in just a sec, so I'm just going to end here.